Back on September 1st, I did a video called 3 Stocks to Buy. And in that video, I picked 3 stocks that I thought had good potential to move higher. It's been about a month now, so I thought I would follow up on those and show you the performance. We'll also think about where the sell points are on those stocks, if there are any at all. You'll find that one of them made a really big run, and so we want to think about where that stock might be sold. I'll also do my normal analysis of the markets. We'll look at the stock, commodity, bond markets, figure out if they're more likely to go higher than lower. And then at the end of the video, I'm going to show you the trade of the week, a stock that made big gains this week, and I'll walk you through the entry signals on that. All right, let's start with the 3 stocks to buy. And pretty simply, they were EVGO, AUR, and COMP. They're all listed on the US stock exchanges. How have they done? Well, let's take a look at the charts, and then we'll also think about what to use for a sell signal. So this is EVGO back on September 1st, and I'll just summarize why I thought it was a stock to buy back then. The stock had broken out of this pennant pattern. So you have this compression of volatility. I did a video just the other day on this initial break from low volatility, this compression of volatility. You can find that on the Stockscores YouTube channel as well. But what we see here is the Stockscores are in a good place. They're above 60, and then you get this breakout. The result over the past month is significant gains. So that breakout was back in here, and again, the video was done September 1st. So that's back there at around $4.50 a share. It had a big run this week, moving up to over $7 a share. Now the question is, should it be sold yet? There's really no reason to sell it yet. The stock is strong. But because it made dramatic gains, if you want to be an aggressive trader, you could watch the intraday chart, say the 15-minute or 30-minute chart, for a break of the upward trend line. Now it's still intact at this point, but because it ran up so quickly in such a short amount of time, there's a very good chance that it will pull back sometime this week. So again, if you're a longer term time horizon, the weekly chart still looks very good, but if you watch that more swing trade time frame, then the 13-minute chart may give, or 15-minute chart may give an exit signal in the next week or so. All right, let's take a look now at AUR. And in this case, one of the things that I like to do is buy stocks that are strong but have weakness. So this stock had run up, nice run to the upside. It had pulled back, and then it had broken its pullback. And so that was why I liked the stock. It looked like it could get through this resistance. It was just bumping its head on that resistance level there at just over $4.60 a share. Well, since then, it's had a decent run. It went up to $6.50. So again, that initial buy point was back in here, and it's had a nice run up. It's now in another pullback. And notice on Friday, it broke that pullback. So that's actually a good sign that it will continue to move higher next week. Not certainly by any stretch of the imagination. And remember, all of the things that I talk about here are intended for education purposes only. I'm not a licensed investment advisor. I've been trading for 35 years, and I've got a pretty good sense of how the markets move, but you should always do your own due diligence and make your own decisions. So on this case, AUR had a pretty good run. Let's jump into COMP. COMP had broken from a pattern called an ascending triangle. An ascending triangle is a pattern where there's a compression of volatility. So in other words, there's more volatility here, more uncertainty here, whereas over here you've got less volatility, which means confidence. And again, I did a video just the other day on the 3 sort of strategies for trading stocks, and breaking from low volatility is one of those. And that's what it did right there. And it then pulled back. By the time I did the video on September 1st, it had pulled back to basically the breakout price. And so it felt like it had pretty good potential to resume the upward trend. And that is exactly what happened, because here you see the day that the video was done, it broke the pullback. So it had this initial run up, pullback, break, and it surged up to 660. It's now in a fairly shallow pullback, and it should bounce back in the next week or so. I would be somewhat concerned if it starts to move down through, say, the 560 level, because that would be too much of a retracement. So it's very normal for stocks when they move up to have a pullback. People take profits. So a stock moves up, profit takers cause it to pull back a bit, but as long as the upward trend is still intact, it still has good potential to resume the upward trend. And in this case, I think that's what comp is looking like. So let's summarize the performance over the last month on these three trades. EVGO up 59%, still no sell signal, but I would dance close to the exit door on that one. AUR up 18% and looks fairly strong still, having broken that pullback on Friday. And then COMP also up 18% and needs to bounce. I would maybe watch that one a little more closely for a sell signal. By the way, the S&P 500 in the same period is up 1.6%. So these picks have dramatically outperformed the overall market, which of course is what we're trying to do, outperform the market. Now, if you want to learn more about my approach to the market, I'm doing some free webinars coming up in October. If you go to stockscores.com, which is my website, you can see the webinars here. Pick one that you're interested in. You can attend all. They're all free. You'll get a free copy of my book electronically sent to you as well. And I also encourage everyone to subscribe to my weekly newsletter. I send it out by email each Monday. And in that newsletter, I will give you some stock picks, some trading tactics. It's free. I've been doing that for about 20 years, and it's quite a popular bit of free information, free ways to learn my approach to the market. All right, let's get into the normal market analysis that I do each week, because of course, we have a US election coming up. There's turmoil around interest rates. Are they going to lower? Well, let's figure out what the charts are telling us to do. So we'll jump back to the Stockscores website, and you can enter the symbol for anything you want to look at in the top left here. So if I punch in SPY, that's going to give me the S&P 500 ETF, and you can see that the trend here is up. Let's do that in blue. Trend is up. It has become a little more shallow. This is called a rising wedge, and it's a sign that the buyers are losing enthusiasm over time. So it's not necessarily a sell signal, but it is a cautionary signal. But at this point, the trend is still up. If we go to the 3-year chart, you can see that we've got this nice upward trend. We have little pullbacks in the upward trend. That's normal. Maybe we'll get a little pullback to the trend line in the next little bit here, but generally, market looks pretty solid. Let's jump into the NASDAQ 100. QQQ is the symbol. And here you see a little bit weaker market because the S&P is moving to new highs, but the NASDAQ, the tech-heavy NASDAQ, is actually not at new highs. You can see it's falling short. So not as healthy of a market. It had been a leader to the upside, and I think it's just seeing more profit taking. But still, the upward trend is still intact. My main concern here is that if we build a falling top and then break this upward trend line, that would be a sell signal. Don't have that yet. We could see the market move to new highs and then there is no falling top. But that's the typical pattern for a market that's topping out. You hit a high, you pull back, you try to make a new high and fail. That's a sign that the sellers are taking control of the market. And then when you break the upward trend line from a falling top, that's a pretty good sell signal. Again, hasn't happened here, but it could. Let's take a look at the Russell 2000 small cap ETF, IWM. And let's jump into a 3-year chart here. And what you see is that we made this breakout from an ascending triangle there a few months ago, and we've had very choppy trading. Now, the IWM is much more sensitive to interest rates. And the expectation is that interest rates will fall. But with a very strong jobs number last week, the bond market, which I'll show you a chart of in just a moment, the bond market went down, which meant interest rates climbed, and that's going to hurt those small cap stocks. And I think that's the reason why they failed to really outperform the large cap indexes. I do think that we still are seeing money rotating into the broader market, but it's happening a little slower than I had originally expected. Still, I think there's opportunities here, but you got to be pretty picky and look for those stocks that are breaking from optimistic patterns, that have a sentiment stock score of at least 50, preferably 60, and then a good pattern. I'll talk about those things in those webinars that I'm doing in October, and I'll teach you how to do that. All right, let's go to the Canadian market. T.XIU is the symbol. And here you see the market stretching to new highs. It's in an upward trend. That's solid. And so it's really a market that's in the buyer's control. And so that's a positive. One of the reasons is the strength of gold, which you can see has had an upward move, a compression of volatility, a breakout, an upward move. We may see a new compression of volatility here, but for now it is a market that is in an upward trend, and therefore we must put a bullish rating on that. How about oil? Well, oil rebounded a little bit this past week, and you can see that right here. And so in the short term, if we jump to a 1-month chart, you see that we have built rising bottoms. We're in a little upward trend. So the short-term chart is positive. Where there's a bit of a problem is when we look at the 3-year weekly chart. And there you see that this market is really in an ascending triangle that goes back 2 years. And until we can break out of that pattern, it's pretty much a neutral market. I think there's some trading opportunities just because of the volatility in oil prices the last week in some of those oil names, and perhaps many of them getting overlooked because of the sort of mundane trading action in oil. But I wouldn't get too enthusiastic, more swing trades in the oil market. All right, let's move our attention to currencies. We'll take a look at the US dollar, which has risen here. You can see that. Again, the expectation because of the strong jobs number, maybe US interest rates will not fall as quickly as had been expected. That makes the US dollar more desirable because interest rates stay higher, and that's why we had this real surge in the US dollar. Let's take a look at Bitcoin. GBTC is the symbol there. And there you can see that we are kind of generally in a downward trend on the daily chart. If we were to dive into the really short-term chart, there's been an upward move, now pullback, and a break of a pullback. So that should, in the short term, lead to higher prices. But when we look at the 3-year weekly chart, it's not a super healthy situation because we've been in this very choppy, volatile downward trend. It is coming near, slowly getting there, to that long-term trend line. And if we were to hit that and bounce, then I think you may see the long-term upward trend resume. But to be frank, I think that Bitcoin is just difficult to predict, and therefore I think unless you're a very long-term time horizon, there's probably better places for the capital. All right, and the final chart we're going to look at is the chart of the bond market. TLT is the symbol I like to use. And there you can see that after a nice upward trend, we had a little pullback the last couple of weeks. And that's taken some of the exuberance out of that rotation from large cap to small cap. Now, the bond market has come back to its upward trend line. This is a little more clear when we look at the 3-year weekly chart. There you can see the weakness. That doesn't look great, but if I draw a trend line across these bottoms, you see that we're right there. And so I think that we'll see the bond market bounce off of that trend line. That means interest rates will start to fall again. It's not a lock by any means, but I think that that's probably what will happen, and that should be supportive for the broader market. Now, stocks in general tend to do well from October until May. And so we're coming into that season where speculators, where money comes back into the broader market, and I think that could be a factor over the next little while. And I think you're going to see an improvement in trading conditions for those more short-term traders, as we should get more action, more volume, more volatility. So let's take a look at my ratings then. US large cap stocks bullish on both time frames. Bullish on NASDAQ in the short term, but neutral long term. US small cap at neutral on both time frames. Canadian stocks and gold bullish on both time frames. Oil and the US dollar short term bullish, but long term neutral. Bitcoin bullish in the short term and long term neutral, and then bonds short term bearish because of that pullback, but neutral in the long term. Now, I want to jump to the trade of the week. I have been day trading and swing trading the stock market for 35 years, and I have a simple approach where I look for stocks that are making abnormal activity to tell us that that stock is in play. And I built some indicators around that, and what we look for day trades anyway, is stocks making what I call an action candle, which you see right there, and I've got my computers analyzing the entire stock market in real time, looking for this to happen. And then when they break from the right kind of pattern with abnormal volume, you can see there DUO had very strong volume. This was earlier this past week. This is the pre-market trading range, and then the opening market trading range, and then finally the breakout with that action candle on strong volume, and that led to this nice run to the upside. And so in the course of about an hour, we saw that stock run from $2 to $3.50, a really nice healthy gain without knowing anything about what the company does, because I really don't care. I'm only interested in following what the smart money is doing. And when they buy aggressively, they create abnormal activity, and that's what I look for with my algorithms. You can learn more about that at Stockscores.com or in those webinars that I'll be doing in the middle of October. Make sure you're registered for those. If you enjoyed this video, I would appreciate it if you would click on the like button, leave a comment, and as always, trade well.